Good morning, everybody. It's Friday. Happy Friday, October 11th, 7:30 a.m. Eastern Time. Just wanted to catch up on some of our trades. Yesterday, the markets went up very big, 36 points on the SPX, in the hopes of a deal. Although there is no deal yet, it seems like something is being cooked up. So I think over the next 1 week, we might see some kind of a deal. It might be very partial, giving an additional debt ceiling room for about 6 weeks or 8 weeks, something like that. But regardless, it would be something is probably going to work out. Now, on our positions, obviously this has been a very volatile month. That's the environment we are in. I think every year we can expect about 1 or maybe 2 months that are highly volatile, and we are obviously in one of them. The goal is to sort of do make the best out of these. Now on Apple, I'm just taking a review of all the trades. On Apple, we didn't do anything yesterday, except for we moved the. I think this was either yesterday morning or day before, but we moved the bull puts, and now you can see we have a very strong premium here, 10,400. Now, one of the questions was how do we, one of the questions on the emails were how do you calculate the credits? So basically, when you open the first credit spread, you get a certain credit. Now, if that credit spread gets into trouble and you have to roll it into a further out strike price, you're going to get another credit at that time. But to do that, you have to first buy the previous one. So basically, the way you have to do the math is that you add both the credits, the first credit that you get and the second credit, and then subtract what you have to pay, and that will be your net credit position at the end of the roll. The also on Apple right now, it's again at 487. We have a very high theta decay, and we'll keep it at that. Costco is doing much better. It's clawing its way back. So as of now, I think we have other positions to worry about. We'll just leave Costco alone. FedEx also came up. It's right in between our iron condor structure. So that's fine. Today we'll close out the gold, and you can see gold is now around 124.2. So hopefully, if we have shorts here, and we'll probably close the whole trade because we do have quite a bit of profit on gold. We've got totally 3,000 already booked, but you can see the position shows a loss of 2360. Hopefully, we can capture a good percentage of this premium here between the short strangle, and that should be good for us. Then the next one is Google. Google, yesterday we made a couple of adjustments. We've now moved it over. I don't think there's any profit left in Google. If we can get this to expire today, then I think we may have a slight profit, maybe $500 on this position. But basically, Google and Netflix is we just have to try to do the best out of these two. Going forward, I'm going to structure the trades. I mean, that's what we thought we would do this the month, but then we got caught up in all this Washington shutdown and the debt ceiling debate, and things went very volatile. But we just have to be a little bit more careful going forward from next month. So I'm going to structure the trades in a much more strategic manner as we go forward, so we don't face this kind of volatility and this kind of adjustments on these positions. So because it's better to be safe, because we want to exit a position with no more than one, maybe two adjustments. That's about it, and we would want to get into a profitable scenario doing those. However, having said that, you're going to face months like these at least once or twice a year. So that is just the way the markets work. So this month is obviously a little extraordinary. So we'll take the necessary steps as we go forward on these trades from now on. HLF should be doing well because it's still sitting right in between our shorts. Now, in all of these, where the trades are expiring next week, we're going to get some pretty good weekend time decay. So now, as we head into Monday and Tuesday, we would probably look at taking some of these off, because at that point, the risk to reward ratio would not be worth it. I know if we can capture this weekend time decay, that would be a good portion of all these trades. Netflix, again, we've got a good premium left to capture. We moved it to safer strikes at the 325, 330, and 285. So it's sitting right in the middle of that range. However, this is, I think yesterday we took a hit of about 3,000 on Netflix itself. And so we would want to watch this position. I don't think we need to do anything at this point. If we can get this to expire right in the middle of our range or even come close to expiry, I think we might eke out a small profit again. So Netflix and Google, the goal is just to get the maximum out of it at this point. Tesla has also moved over. We lost $300 on the roll yesterday to 190, but that's fine. We've already booked 1700 before that, so we are net plus 1400 on Tesla. So that's where we stand. We still don't have a resolution from Washington, so I would be wary of getting into any trades. Besides, we are running now straight into the earnings season. So today, JP Morgan reports and Wells Fargo. That's the official kickoff of the earnings season. And next week, we'll have Chipotle. We'll have a couple of others as well. So now it'll probably be all earnings trades for a while, and we'll close out many of these positions next week and get on to earnings trades. So we'll see you then. Thanks.